Hello friends, it's Josao here again with another tutorial. In this particular tutorial, I'm going to take you step by step to explain about the candlestick formation for beginners. Okay, candlestick is very important as you are going to trade the financial market, be it crypto, forex, stock, binary, and any other market. So by the end of this video, this is what you're going to know. You are going to know what is a candlestick. All right, you are going to know brief history about the candlestick, the candlestick anatomy, how candlestick are formed, all right? And you are going to know about the candlestick sizes, and we are going to just have what a flashback. We are going to reflect on everything, and you are also going to see a live chat on how candles are formed. Okay, without wasting time, let's do this. What is a candlestick? What is a candlestick? A candlestick in the context of trading, all right, refers to a graphical representation of price movement over a specific period of time. You probably click this video because you have interest in trading. Okay, no matter the market, be it crypto or forex, you are interested what doing what trading. So if you want to basically start your trading career, definitely you are going to what see a lot of candlesticks. Okay, that is basically how price what move from one point to another point. You might have what probably saw charts where you are seeing candle going up, you see red basically, and you see what green. These are what we mean by candlestick. But you need to know one thing. Candlesticks explain something. It gives you on information. That's what I'm about to explain to you. So whenever you see a candle forming, you are going to understand how this is what this candle is telling me. Okay? So candlestick charts are commonly used in technical analysis. What is technical analysis? Technical analysis, there are basically firstly three types of analysis. You can check the technical analysis playlist to know about this. We have the fundamental analysis, which talks about what news trading. You have what the sentiment, which has to do with emotion, all right, and mood of what market participants. And we have what we call technical analysis. This is basically trading with past historical data. Okay, so this is basically what you have, like the price patterns, you have trends. I made a video about a day ago about trends. You can watch about that. All right, and potential market reversals. Okay, you can talk about what indicators. You talk about support and resistance. You talk about candlestick formations. These are all part of what technical analysis. Okay, it is also called price action. So if you ever get to hear people say, I'm a price action trader, it means he or she is a technical trader. So when it comes to candlestick, just one, okay, single candlestick consists of what? Four major components. The candlestick is going to tell you the opening price, the price at which this candle starts for me, the closing price. It's going to tell you the highest price at that particular moment and the lowest price. These are basically the four main components of what a candlestick. Okay, it's going to show you what the open price. It's going to show you the close, the high, and the low. So basically, you just use this like most of the time for you not to forget this. We say what OHCL. Okay, so this is what open, high, the close, and the low, or open, close, high, and what low. Okay, OHCL. So most of the time you are going to be seeing this. This is basically the component. Let's talk a little bit about the candlestick history. All right. So basically, the father of candlestick charting is often attributed to Homer. Okay, Mansa Homer. All right. This is Japanese rice merchant. So basically, the candlestick is believed to what started from what Japan. Okay, when Japan were basically the Japanese were basically doing what rice trading. They were into this rice trading. Okay, during the 18th century. So they believe like what this particular guy developed the candlestick. All right, as a technique to predict what how price is going to move. All right, the rise of what is going to move in the market. So this method we are later like popularized in generation of traders and analysts. Okay, but later It was wholly found in what Japan. Later, it moved to the West, the United States. This principle of candlestick charting was introduced by a Westerner, which is Steve Nitzen. All right, this is basically an American technical analyst. Okay, so he wrote a book about Japanese candlestick charting techniques. Okay, so this guy played a very vital role, all right, in bringing the attention of candlestick to the Western financial markets, be it the stock and other markets today. So this is now widely used, all right, from banks and other financial institutions use candlestick. So I don't want to keep you guys with this history stuff and all. You just need to know that. So let's move again. This is the candlestick anatomy. How a candlestick form? All right, I'm going to explain this to you. When the candlestick like started in Japan, there were only what two colors. We are having black and white. But now you can see what red, you can see green. It just depends on you. I'm going to show you how you can what set up your candle like the colors you want. Okay. But when this basically started in Japan in the 18th century, all right, by Homer, they were only using black and white. So now let's go to this and I will show you what I mean by this. Whenever you see, so this is black. This black basically means what? Sell, okay? Sell. It means what? The price is what? Dropping down. Okay. The sellers are what? Going to push the price down. Okay. It means the price is going to go down. All right. Whenever you see this black, but now these days they don't basically use black. So let me explain this. As mentioned, we basically have what? Four parts of the candle. Okay. So this is what? The open. It shows you the open price. This shows you what? The close price. And this shows you what? The lowest price which the market moved to. And we have this is what? The highest price which the market moved to. Okay. So this is basically what this component. It shows you the high, the highest price, the lowest price. It shows you the open and the close. Okay. I'm going to explain more. So you see this area here from here from the open to the close this here is called the body. Okay, this is the body. All right, just like as human being we have what like the skin. Okay, our skin. So this is what the skin of what the candle. Okay, so this is called body. All right, you can take this to be the head. Okay, so this one you are seeing here, this top is called wick. Okay, this is called wick, or you say what? Shadow. Okay, shadow. So this is what? Wick. This tail which you are saying. Okay, it's just like a candle. You have what? The wick. Okay, so this is wick. This wick is also called shadow. I want to explain the part. Okay, so we have what? The open. This is the open price. This is what? The body. Okay, this is the body, and this is what? The close. This is the low. Okay, low basically means the lowest price which what the sellers push. Okay, and this is what? The wick, or you say shadow. Okay, so if that is clear, let me now explain to you how this candle is basically formed. What is the psychology? All right, how are this candle basically formed? So you already know the part, okay? You already know the part of the candlestick. So now, whenever we see what a black candle, it means what the price is going down. Okay, the sellers are what pushing the price down. This is basically it. So if the price is and the sellers are pushing the price down like this, it means what? The price is going to open at the top because let's say you take a tennis ball. Okay, this is the tennis. Okay, this is the ball here. If you throw the tennis at the top, you send it to the roof, it's going to what? Drop down, right? It's going to come back down. Okay, even if you send it up to the sky. Okay, this is the tennis ball. The ball is what's going to drop down. All right, the ball is going to drop down again. So now the sellers basically are fighting to what? Push the market down. So what is going to happen? The price is always going to open at the top. So this is where the price open. Okay, this is where the what candle is going to start forming. Why is it going to form here? Because they want to push the price down. Okay, so let's say for example, this price here is what $10. This is basically $10. Okay, So when the price open here at $10, let's say for example, this is what Bitcoin. Okay, I'm a forex and crypto trader, so I will use Bitcoin as an example. If you don't know what a Bitcoin is the first cryptocurrency. All right, so this is what $10. So when the market opened here, let's say we have different time frames. We have what the 5 minutes, we have the 15 minutes, we have 30 minutes, and all. So now let's say this is what the 1 hour time frame. Okay, let's say each candle you are seeing here is going to take 1 hour to form. Now let's say this is what 10 o'clock. Okay, 10 o'clock. This candle starts forming by 10. So by when it's 10 o'clock, the price of what one Bitcoin is what $10. So what happened? The sellers came in, they pushed the market down, they pushed the market down. Okay, to this point, the market closed here. Okay, the market what? This is what the market closed here. Okay, the market closure. Let's say they push firstly from here the open price from $10, they push this to what $5. Okay, so whenever the sellers are in control, they want to push the market to the downside. The sellers want to push the market to the downside. Okay, so now after this, now what you are going to understand when the market opened there, okay, $10, okay, the sellers try to push the market to this downside, okay, but what the buyers came in, okay, and pushed the market up to this point, okay, up to this point, but they don't have enough what power to push the market to the upside. What happened? The sellers came in and pushed the market down again. So let's say this is the highest price. Let's say the highest price here is what $20. When price like when this candle starts forming is 10 o'clock. Okay, it starts forming by 10 o'clock. It opened by 10. So it opened at what $10. Price move a little bit down, okay, and what the buyers, when we say buyers basically are the one that are going to push the price up. So they came in, all right, they pushed the price up of what this Bitcoin. Okay, we are using Bitcoin as example. So they push the price up when like it's going to be tug of war. Both the buyers and the sellers are basically going to fight. Well, the buyers are fighting to push the price up, the sellers are fighting to push the price down. And you know, in tug of war, only one team is going to win or one person is going to win. Okay, so when the market open here at this $10, this is the open price, the price moved down a little, the sellers pushed the price, but what happened? Buyers came in, okay, and pushed the price right up to this point. So this is what the highest price within the 10 o'clock. This is what the highest price which the buyers were able to push this price up. And what happened again? The sellers at this particular point where you are seeing this high, okay, the buyers got tired. What happened? The sellers now came in and pushed the price right down to this point. So you see here, the sellers what came in and pushed the price right to this point. Let's say this one is what $2, this low. Okay, they pushed it to what $2. But what happened again is going to be the opposite. So the sellers came in, they pushed the price right here. But what happened? They don't have enough power. So what? The buyers pushed the price up to this point, and the buyers were tired. This is where we have what the close price of what $5. So from 10 o'clock, this one candle, let's say we are using what the 1 hour time frame. Okay, so from 10 o'clock to 11 o'clock, okay? When the price opened at 10 o'clock, it was $10 for one Bitcoin. So within that period, the market moved down, okay? So from 10 when into 11, which is 1 hour, from 10 to 11, the lowest price which Bitcoin moved to was $2. This is what? This is the $2 you are seeing here. The highest price which Bitcoin moved to was $20. Okay, so market opened by 10 o'clock at this particular price. The what market moved down a little. The sellers what the buyers pushed the market again to $20, and what the sellers came in, they pushed the market right down to $2. But buyers pushed the price up, and the market closed at $5. Okay, at $5. This is basically what we mean by what the candlestick anatomy, how candles are formed. So I'm going to explain about the white candle, and we are going to go to the next one so you are going to understand this better. What I advise you to do is watch the video over and over again. If you are finding value, I don't know if you have not subscribed, what are you waiting for? Come on, just click the subscribe button, like this video, and share this video to others. God bless you for doing that. So now this is what the white candle, okay? This white candle is what the opposite. These ones are for what sellers. They are pushing the price down. But this one, yeah, this white candle is what for buyers. Okay, the black is what for sellers, and this one is what the buyers. Buyers are always like going to push the market up. So if you want to buy, you can also use this word as what long. Okay, I want to go long. So which means you are saying the market is going to go up, or you say what bullish. Okay, bullish. They are all the same. For this one, you can sell, or you say you want to what short. So when you say I want to short the market, it basically means what you are saying the price is going to go down. Okay, or what bearish. Okay, bearish, bullish, bearish. Now let's talk about how this white candle is formed. The parts are still the same. We have the high, the low. But this time, you know when if you take a tennis now, you have the tennis in your hand, you send it to the sky. The tennis is going to move up, right? Like this. It's going to move up. Okay? It's going to move up. So now price is going to open at the bottom here. Don't forget, we want price to move up. So you are saying price is going to move up. So the candle is going to open at the bottom. For this one, the candle is what opening at the top because you are saying it's going to what move down. Okay, that's the difference. So now when the let's say this is Bitcoin again, let me clean up this so it's going to look more decent and easy to understand. Let me just clean up this. Please, if you are finding value, subscribe to the channel and drop something very good in the comment section. Let me know if you appreciate this tutorial and you want more of this. So now, price open here. Okay, this is what, let's say this is Bitcoin. So now the price, let's say this is what, $10. Price open here at $10. We are going to do the same example. Let's now say this is from 11, okay, from the price open here at 11 p.m. Okay, 11 p.m. So for this basically one, this is 11 p.m. So let's say this is the 1 hour time frame. So for this candle is going to take 1 hour to form. So the price open here at what? $10. Okay, $10. So the price moved a little bit up. What happened? The sellers came in. The buyers were pushing the price up. Okay, they push up the price. Let's say this particular point is like, let's say this is $13. Okay, so the buyers what push the price up to there, but what they got tired. What happened? Sellers came in and they pushed the price right down. Okay, they pushed the price right down to this point, but they were tired. So this is what the low. So let's say this is what $5. Okay, let's say this is $5. Don't forget when it's 11 o'clock 11 p.m. the market open. So if you want to buy one Bitcoin, you can basically buy one Bitcoin at $10. But by let's say 11:05, okay, the market open by 11. This is 11 here. The open price is this is 11, okay, the time here. So let's say by 11:05, after 5 minutes, all right, the price was what $13. But later the sellers came in and pushed the price right down here. Okay, they pushed the price right down here. Okay, but they were tired. The sellers were not having enough strength, enough power to continue to push the market down like to $4, $3, $2. So when they got tired, what happened? The buyers came in and what they push the market right up here again. Okay, they push the market right up to this point. They push the market right up here. So let's say this the highest price within that 1 hour is what $50. Okay, let's say it is what $50. So this is the highest price which what the buyers push the market up. Okay, so they push the market right up here, but at this particular point, this high, the buyers were tired. So what happened? They pushed the price down. The sellers came in and pushed the price down. Okay, they pushed the price down, and this is where what the candle closed. So let's say this one is $25. Let's say this is $25. All right, this is $25. So now, what you are understanding is what the candle basically when it's 11 o'clock, okay, 11 p.m. The candle was what the price is what $10. So what by 11:05 when the candle starts popping up, then what it was $13. So imagine if you enter at $10 and you are saying the price is going to go up, you are now in profit because you predict the price was going to go up. All right, and now it's $13 from $10 to $13, which means you are making profit. Okay, so what happened when it's 11:05? What the sellers came in, they pushed the price right down to this point. So now let's say within 11:05 to 11:10, what the price was $5. So you see, but what the sellers got tired at this particular point when they pushed the price here, they got tired, and what the buyers came in now and pushed the market right to this point. So from $5, what we moved to $50. But the buyers also were tired because from this point here, from the low to this point, it's a high amount of what buying power. They got tired, and what the sellers pushed the market down here, and this is what the close. Okay, this is basically what the close. Hope you guys are understanding this. Hope this one is like clear. All right, so the next thing we want to do, let me just explain this again. Let me just move to the next slide. So you are saying, so now this is what I was explaining. All right, this is what the basic of candlestick. So now, nowadays, you are basically seeing what green and red candle. All right, you are basically seeing green and red candle. All right, this is basically what you are now like seeing. So now the price open here. So when you basically say you want, you see, this is what the price open here. Okay, the market move up a little, and what the sellers came in and pushed the price down. This is our low, but the sellers were tired at this particular point. So what the buyers came in and pushed the market right up. This is our high. This is our high. Okay, they pushed the market up to this point, but they got tired, and what the sellers pushed the market here, and the candle closes here. Okay, so for this one, the price open here because why we are saying where the market sellers are going to be. Whenever we say sellers, it means like what the price is going to go down. Okay, so this is basically like what the price open there. Okay, and what the price moved a little bit down, and what seller buyers came in and pushed the price up to this point. Okay, they pushed the price up to this point, but they got tired, and what happened? The sellers came in and pushed the price right down here. The sellers pushed the price right down there. Okay, but what happened? The buyers came in and pushed the price again up, and the candle closes here. So this is basically what the candles are forming. We are going to see this very shortly in the live chat, and you are going to understand what more. We are going to see this in the live chat. So the candlestick body size, all right. So when you open a chart, as we are going to see shortly, we have different kind of size of the candle. Okay, there are different size, and the size of the candle is very important also before you enter a trade. So the bigger the candle, okay, the bigger the size of the candle, the more buying power. Like for example, this is what the seller or the buyers, okay, these are what the buyers. It means like what the market opened, yeah, okay, the candle start opening here, it move up like this. This is the close, and this is what the high. Okay, and this is what the lowest price. So now you see this candle means like what this is a bullish macbuza candle. This is the name, the macbuza, all right, candle. All right, this is what it shows like what this is high amount of what buyers in the market. And we have this other one also, this like this candle, let's say for this one we have like what 100. Okay, we have like 100 buyers, 100 people that are what buying, so the price is going to go up. While for this we just have like what 25 buyers. So you see the amount of people here and the amount of people here are two different, so the strength is going to be different. Let's say we are doing tug of peace, okay, and this is like the middle. We have 100 people at this particular point, and we have what 25 people at this particular point. So who do you think is going to win? The one with what the 100, right? Why? Because there are too many. There are too many. All right. So it's the same for this. This is what for the selling. The candle open here. The price move down here. This is what the close, and this is what the low, and this is what the high. Okay. So it's just the same again. Lot of sellers we are here. Let's say we have 100 sellers here, and we have what 25 sellers here. So you see the amount of sellers here are more than what this second candle. Okay, this is basically what I'm trying to like what explain. So the size is very very important. The bigger the size of the candle, all right, the bigger what it shows, the more amount of what buying power or selling power. So let's look at the other color again. I love showing you different colors. So this is what You see, I mentioned when we say long, it means what you are buying. Okay, when we say long, it means what you are buying. So you see, the size of this is very, very little, right? So this is what the shadow. Okay, this is the high. All right, this is the high. This is what the low. This is what the open price. Okay, this is the open price, and this is the close. So all this green area you are seeing is called the body. All right. So this is what the open again. Okay, this is the open here. Price open here with the red and closes here. This is the close. This is the low, and this is what the high. All right, so you see this is what the high and this is the low. So price open here, this is the opening and this is the close. So it's just the same for this one. Okay, so the bigger the size of the candle, it shows the more power, all right, that the buyers or the sellers are in control of that particular market. Hope you are grabbing the concept, guys. So now let's look at the different body sizes. We have different sizes of the body. Okay, I'm just going to like show you this one, and we are going to do about candlestick patterns in upcoming tutorials. So if you have not subscribed, you are going to miss out. Ensure you do now. All right, let me give you 2 seconds. One, two. Thanks for subscribing. You guys are the best. I can't do this without you guys. All right, I appreciate you, the love and everything. So these are different sizes. You see this one, this means what? High amount of what buyers are here. Okay, you see this other one again. Let's say this is what 100 buyers. Okay, this is what 75. Okay, this is 75. This is 50. Okay, and this is what 40. So this one is called the doji candle. This can whenever you see this candle, it means like what? Neither the buyers or the sellers are in control of what the market. It means they are still contemplating. Okay, so you don't want to enter in terms of this one. Okay, when you have like this doji, you don't want to what enter. This is called the doji. Okay, so it's just like the cross. So you see the open and the close are just the same. Okay, the open and the close, this is the high and this is the low, but the open and the close are just the same. So you want to what avoid this kind of what and this kind of like what market. Okay, it means indecision, neither the buyers or it's like kind of equality. We have like 50% of buyers and 50% of sellers, so anything can happen. The market can either go up or can go down, so you want to wait before you enter this trade. So this is the Makbuza candle. Okay, the name of this candle is the Makbuza candle. I'll do upcoming tutorials about the names of candle and how more details about each and every one of them candlestick pattern. So let's say we have what 100 sellers here, we have what 75 here sellers here, we have 50, and we have like what 40 sellers here. So you see, this is basically what this is trying to like what say. Hope you are finding value in this particular tutorial, guys. This is like a mini course about candlestick details. This is all you need to know about what candlestick formation. All right, this is all you need to know about candlestick formation. So these are what the sample of body sizes you can see on the chart. We are going to see a live chart. Okay, we are going to see a live chart very soon. So you see, this is the doji candle I was talking about. You see, this is the doji candle. You want to stay. The market was what this is was uptrend. Okay, all of a sudden you thought like the trend was going to continue, but now we have what kind of what reversal. The market was moved down. Okay, so this doji candle basically shows what like indecision in the market, all right, or it's kind of like equality, or it shows like this can be what a sign of reversal. Okay, that the market is going to reverse. If the buyers are in control, it means the sellers are going to take over, or if the sellers are in control, it means what the buyers are going to take over. To play it very safe, avoid this kind of market until what you see the particular direction, all right, where the market is going to go. The other way in which you can basically like do this doji, let's say there is this standard doji, yeah, at the top. Okay, so after this doji, we already know like this is in the issue in the market. The next thing you need to do, you need to wait to see what the candle that are forming. Okay, this candle, then when you basically see this next one, this is your confirmation candle, your entry. But we are going to talk about this one when we are doing candlestick patterns. When we are going to do candlestick patterns and all, I'll explain more. Okay, as you have seen here, the price was what moving on uptrend, right? And we have this doji, and we have what reversal. The price what moved down. So this is what you are going to see. I'm now going to take you to the chart so you can basically see how candle is basically forming. Okay, but before we move to the chart, just a flashback. If you are going to learn anything from this particular course, ensure to know what a candlestick is. So candlestick basically helps traders to analyze patterns, trends, and predict the next direction of the market. So this is how the market is moving. So you are going to know whether the market is moving in an uptrend or it's moving down, okay? Or the market is what in the sideway, which means it's ranging, okay? So you have to know the four components of the anatomy of the candle. It shows you what the open price where the markets what the candle starts forming, the close price, the high which is the highest point with the price the market move to at that particular point, and the low. Okay, we have what the shadow which is called the wick. We have the upper shadow and the lower shadow. And one thing you must know, this is very important. The bigger or larger the body size of the candle, the stronger the buying or selling pressure. All right. I believe I've explained that. So now what I'm going to do, let me take you to the chart and explain what I've already been explaining to you guys. All right. I have a complete tutorial. TradingView is basically a platform where you tend to do your analysis before you place a trade. So now I'm going to show you about these candles. So now you have what at the top here where you're seeing this cursor, you have like time frames. Okay. So we have what I have the 1 minute here, 5 minutes, 15, 30 minutes, 1 hour. So if I go to the 1M, this is 1 minute. Okay. Each candle you are seeing here, be it red or be it blue. So I change the color from the tutorial. I explained that you can basically change the color to any color you want. Okay. So this is basically what if I basically just like change the color for you to understand about trading view. All you need is like just watch my trading view tutorial, check my technical analysis playlist. Okay, so this is basically it. Okay, so each candle you are seeing here, okay, so this blue is what the bullish candle, all right, just like the black, like the white, or what the green you are seeing. For me, my bullish is what blue. All right, and if the price is moving down, the sellers are in control. You are going to see that this is how I just set my. You can set your to any color you want as long as you understand how it is formed. So if we basically see this a candle that is forming, okay, this is our USD. This is our USD. ZAO XAU basically is the abbreviation for gold. Okay, so this is what you're saying. So now this is a live market. As you can see, this is market is open. I've just zoomed for you guys to see this candle is now forming. Okay, this candle is now what forming. Okay, so you are saying what the price opened at the top. All right, this price opened there. It has not finished yet. The candle is still what forming. So the price opened there. Okay, the price open there, and you are seeing what sellers are pushing the price up. You see, the buyers are pushing the price up currently. Sellers are pushing it down. Okay. One thing you must also know, there is going to be a time wherein you are not going to get what weak. All right. You are not going to get a wick of the candle. Okay. So you are just going to have the open. So it's finished now. This one here, let me show you guys. So guys, this is our low. Okay, this is what our low, yeah, I was explaining to you about. So within this 1 minute, okay, you can select different time frame. So this 1 minute, this is the low price, this is the open price. So the open and the highest price is just the same. Okay, this is the open there. The open, let's say the price open at what you are seeing 2382.76. So that is the highest point, and that is what the open price as well. And this is the lowest point which the price moved to. So you see another candle is what forming. Okay, so you are seeing this is live markets. Okay, you see sellers are pushing the price. So whenever you are seeing a red candle, the candle starts forming directly from the top. It opens at the top and close at top. While for what the bullish candle, then it's going to start from now. You see, right? This is live tutorial. You guys are now seeing. You see, another candle is forming. So now this market is going down. So if you want to change the time frame, you can just what change. This is 5 minutes. So each candle you are seeing here is what taking 5 minutes. If you go to what 15 minutes, this is each candle you are basically seeing here is taking 15 minutes to form. You can go to 30 minutes and all. So for you to understand more about this time frame, you need to watch what my technical analysis about my tutorial about what trading view. All right, I explain completely how to use trading view, how to create an account for free. It is totally free, no money is required. All right, you can basically watch that tutorial and you set up this particular stuff. All right, so guys, this is what the tutorial I promised. Hope like this one is basically clear. You are now seeing this. Let's go to the 5 minute time frame again, and if I just try to zoom again so you guys can basically like see what is happening here. So this is just what I was explaining about in the tutorial aspect. Okay, I've zoomed a lot, so let's go back a little. Okay, so you see these candles are forming. This is live market. Okay, so this is live market. So this basically is showing you how the market is moving currently. Okay, so I can go back to what the 1 minute, which means like each candle you are seeing here is taking 1 minute to form. So right currently you are seeing what the sellers are in control. You can see like what the doji, all right, at this top here, the doji here. All right, then what in the addition, like what the buyers we are pushing the price up, okay, but all of a sudden we saw this doji and now price is what's dropping. Another one is currently forming here. So guys, this is basically it. If you find value in this tutorial, it's going to make my day. If you subscribe, if you have not, like this video, share this video to others, and you can send me a message by Instagram at Joseph Say Concept to join my 1 month free forex and crypto for beginners. And you can also join my Telegram group. All right, the link is in the description for free signals. If you don't have your trading account, be it for crypto or forex, check the link in the description. Use my